to your Mortgage Insider update for November the 13th. We have just got the CPI report, Consumer Price Index, coming out Wednesday following the Fed meeting last week where they cut the federal funds interest rate another 0.25%, making that their second cut in the face of higher inflation, or actually this month, pretty steady inflation, but still higher than their mandated or their vocal goal of 2%. So the CPI report comes in at 2.6%, 3.3% on their core rate. So the core rate stayed the same month over month from October of 2022 into October 2023 at 3.3%. Basically means we haven't made a lot of progress in the last year when it comes to core inflation. This strips out food and energy, and it does worry the markets, which we're going to see here. Even since the federal funds cut last time, we've seen a run up in interest rates, and really not a lot of impression made today with the new CPI report even coming in at expectations. It might be another couple months before we start to see any relief on the inflation front. Overall 10-year Treasury interest at 4.41%, down 1 basis point today. This comes off of a pretty big move higher yesterday. With the days prior to the federal funds meeting, we saw a drive up in interest rates. Then on the heels last Friday of the federal funds rate cut, we actually saw some relief in the market, pulled back. Pretty mellow day coming into end of last week, only to have November 12th, so Monday was a holiday for the bond market. So coming back off a long holiday weekend for the bond market, we saw the interest rate spike. Today we actually started off, we have been much lower, but we can see not a lot of movement. Basically, we're looking at elevated interest rates for the foreseeable future. The next round of inflation numbers will start to come out like later this month, with the personal consumption expenditure, PCE, being the Fed's favorite measure of inflation, we'll get prior to their next Fed meeting in 6 weeks. As we can see, the federal funds rate cut last 2 times now has really brought, in the short term, long interest rates, 10-year interest rates have moved up. This is just going to take some time. The Fed has said that they're committed to continue lowering their short-term, their overnight interest rate. That's the federal funds rate. So they'll continue to do that, potentially one more time at the end of this year. That's the projection, at least from their dot plots at their prior meeting. So the December meeting will be a much bigger event where they'll do a lot of an updated projections. We'll see if any of the inflation numbers or jobs numbers, or what's coming up later this week, retail sales, as we get into the holiday season. That will start to set the tone for, our company's going to be having a robust end of sales year. Higher prices can come with better sales, or is it going to be full of discounts? That would be deflationary. So we'll see. We'll come back with you on updates as they come up. Have a great day.